Good morning, everybody. Welcome back to Crypto Warehouse. Another week closer to the halving. It's the 8th of April, 11 a.m. I am Mike, and hopefully within the next of note over the weekend, Solana versus Ethereum, which is the best one to invest in? We're then going to look at Near Protocol. We're then going to look at the Pantera Fund, the Pendle Pump, which is a new, not new coin, but it's been in the news because it's been pumping. Then we're going to have our final thoughts. And as always, bottom right-hand corner, $74,000 is my next target for Bitcoin. We need to get above 73.8. 74,000 is the target. Bottom left-hand corner, 117,000 followers. We are closing in on 150,000 like it is a rabbit in the headlights. So that is pretty much it. A few good mornings. I think Gianni is here, Mags is here, Hidden Agendas is here. Good morning to everybody else in chat. Ale, if you are here, this is live. We are not a recording, so make sure to smash the like. Make sure to say hello. If you've got any questions, ask them in chat. But let's start off with the crypto prices. So, market cap 2.65 trillion. Isn't that a nice number to see? Up 2.6%. Volume still very low. I know volume over the weekend is traditionally low, but that is exceptionally low for what we've just been seeing. And there we go. The monster that is Bitcoin dominance is edging ever so closer to 53%, 52.7%. ETH is coming in at just over 16%. That is falling away. For those that missed it, Brogan was in a roundtable discussion yesterday talking about the impact of the Ethereum ETF. I think he was live yesterday afternoon about 2 or 3 p.m. talking about what happens if it's approved and what happens if it isn't approved. And it was a good discussion to listen into. And I think the long and short of it is I don't think Ethereum is going to be overly damaged if it's approved next year compared to this year. Bitcoin then, $72,055. ETH back at $3,600. ETH is now only 10% away from $4,000. That's a big number for Ethereum. Lots of numbers are big for Ethereum, but that one in particular, getting towards all-time highs. So they're the top two. Gainers and losers in the last 24 hours. Dog with hat just won't lie down and go away. Nervous Network, had never heard of it. I'll be perfectly honest with you. Unless it's been a rebrand, I need to go and look into that one. Lido is up a chunk. Pepe, Gala, Floki, a lot of meme coins are up today. Beam is up, OP is up, and a few others. 5-6% is very nice. Nothing majorly up there apart from a few, and nothing majorly down. Ethena went on a bit of a run, so 6% is retracement, is probably just profit taking there. Wormhole, same thing again with Wormhole. It had a massive run up. Now it's coming back down again. It's down 25% on the week. eCash is down a little bit. Not many losers. That is good to see. So let's have a quick look at some of the X files then before we get on. I am drinking coffee steadily throughout the show in the hope that the caffeine defeats my headache. I feel like I've got some kind of hangover and I certainly haven't been drinking. So one of the things you need to realize about crypto Twitter is this, I wouldn't call it urge, but this incessant bickering for clickbait. Now, we know that BitBoy does not think that Ada is dead, but it's a headline. And when you want people to watch your videos, if you don't put a catchy headline like this, nobody is going to watch your videos. So Ada is dead. Charles, believe it or not, the man himself replied and said, Bell Armstrong was always friendly in person to me. Sad to see him going down this road. Wish him well and hope for the best. Now, of course, the big event on the horizon for Ada and Cardano is, of course, Hydra. That's coming up very soon. Cardano is certainly not dead. These tend to be the bottom signals. So when you see people saying XRP is dead, I said this last week, when you see people saying XRP is dead, or when you see people saying Cardano is dead, they're the ones that, whenever you ask somebody, where is ADA going to be in 5 years' time? Where is XRP going to be in 5 years' time? Where is Solana going to be in 5 years' time? They don't have the answer because they have very short-term horizons. And that's an issue. When you look at these projects that are trying to build, they're competing with new projects that have sexy titles and, you know, sexy people involved, and oh, look at us, we're now doing this, that, and the other. In 5 years' time, there is more chance of XRP and Cardano existing in their current state than Avalanche or Sei or Sui. They just build at different speeds. We're talking about apples and pears. XRP is going to build CBDCs. XRP is going to build stablecoins. Cardano is going to be involved on a completely different level to retail. It's going to be involved at a government level. It's not a fly-by-night retail blockchain, so you're going to get people slating it. And then all of a sudden, one day, Hydra will be released, the announcements will be made, and guess what? You'll have Ben Armstrong saying Ada is back from the dead. Ada is resurrected. That'll be his next video. So ignore things like that. Now, Michael Saylor, I mentioned this a few weeks ago. What is going to happen either when we run out of Bitcoin or it gets to a certain price that Michael Saylor can no longer afford to be buying 100,000 a year, 50,000 a year, 10,000 a year. Scarcity, liquid forms that create risk-free lending. Now, I'm not going to go into this because it is fairly lengthy, but it does explain in great detail that Michael Saylor's strategy is not he's not just trying to buy Bitcoin to hold Bitcoin on the hope that Bitcoin goes up in value. He's buying Bitcoin to create what Hal Finney spoke about all those years ago, which is a Bitcoin bank. And that is even more spine-chilling than just buying 180,000 Bitcoin. And Michael Saylor knows it, and a lot of people, especially countries, are just walking blind, thinking that Bitcoin isn't a threat or Bitcoin isn't ever going to have an established position, whatever it might be. How big does Bitcoin have to get for them to actually look at it? We're already at 1.4 trillion. Are they going to look at it at 5 trillion, at 10 trillion? When are they going to understand that Bitcoin as a means of money, as a digital source of liquidity, when are they going to realize that Bitcoin makes a perfect tool for storing value in everything, in loans, in treasuries, countries, companies? It makes perfect sense. So even though people will always say that this genius that's Michael Saylor has come up with this, you can go back here. This is the thing I wanted to show you. This was in 2010. Now, unfortunately, Hal Finney is no longer with us. He spoke about a fully collateralized banking system. And that is where I think Michael Saylor is trying to take the next step. So it's worth reading. They're called Level 39. Level 39. I'd go and read that if I was you. Go and check that out. It's well worth a read. And I don't want to spend too long on this, but it kind of explains the next steps. What happens after this halving? What happens after the next halving? What happens when we get to $1 million Bitcoin? What's the future of Bitcoin? Does it just go like gold, become stagnant, stay at $1 million for the next 30 years? Or is there a next use case for it? Gold, by the way, for those of you that don't know, is impossible to move. There's tons of it under the City of London, and they don't move it. It's so heavy, they just trade notes on it. So gold fails because it's not transportable. If London was invaded and all the gold all the gold there was taken and, you know, taken to wherever it might be, it'd cause a problem because it's a physical asset. With Bitcoin, it can move within 10 seconds from the UK to America to China to wherever it might be. Antarctica, can go wherever it wants in the world. So there is an inherent flaw with gold, and that is you can't move it. Bitcoin can be sent in a matter of seconds anywhere in the world. So coming shortly, X will publish everything demanded by the Attorney General, I think he's called, in Brazil. This judge has brazenly and repeatedly betrayed the Constitution and people of Brazil. He should resign or be impeached. shame on him. Now, why is that important? Freedom of speech is the same as freedom of movement and freedom of money. Now, in the future, there is very likely going to be a decentralized version of X, which cannot be censored by governments. Now, I'm not saying that's a good thing. I think that's a very dangerous thing to play with. Bitcoin is an uncensorable version of money. X could become an uncensorable version of speech. And speech and money are really the only two things we have that can remain uncensorable if we have a future that isn't being controlled. I'm trying to pick my words very carefully on this. But if you don't know anything about this, hasn't been in the news, but what they're doing in Brazil is paramount to anti-democratic positions. I'm not going to go into it any further. Go and read about it. It's very important. Because what happens in Brazil can happen in other places as well. Now then, Rich Dad Poor Dad. Again, ever since I've been listening to this guy, he's like the man with the placard that walks outside the police stations, outside the schools, outside the hospitals with a big plaque that says the end of the world is nigh. Now, of course, today is the eclipse in America. We have the eclipse, or they have the eclipse, and I imagine that it is going to be somewhat of a panic day in America. Well, Robert Kiyosaki likes to jump on the bandwagon of fear. The everything bubble, stocks, bonds, real estate, set to crash. The US debt is increasing by $1 trillion every 90 days. The US is bankrupt. Save yourself, buy more gold, silver, and Bitcoin. Remember, all three of those, traditionally, gold and silver, are inflation hedges. So you hold them in times of conflict, in times of inflation. Their price should rise. It hasn't done recently for gold. The price should rise in line with inflation. So if you have $100 of gold, it should outpace or stay pace with inflation. If inflation is 50% over a 10-year period, gold should be $150. That's why you hold your money in gold. Even though it doesn't go up in value in terms of inflation, it goes up matching inflation. So $100 today is $100 in 10 years' time. That's how it should work. Bitcoin, however, is probably going to be the next inflation hedge. That's why we talk about Bitcoin in such depth on here. And finally, the last snippet, just to remind all of you that don't know, I've been living under a bubble. The Bitcoin halving is now less than 12 days away. There are only 1,725 blocks to go to 840,000, which is the point of the halving. We have a nice graph down here explaining it. This is the Watcher Guru ticker. The other one I think is Nice Hash. This one's got a little bit more information on it. Now, we are planning to do a halving party, but this time here keeps changing. So we won't be able to announce a halving party until we are pretty much at the death. We know it's a week on Saturday, so we know we can do it, but we don't know. If it's 3 o'clock in the morning, we're not going to be doing it. If it's like 8 or 9 o'clock at night, UK time, we will do it, but we need to wait and see. At this moment in time, it's midnight, so we probably won't be doing it. But is the Bitcoin bottom in? And I said, I gave you a few targets of where I think we could go in a correction. And this is where we are. We are so close to the halving that I don't expect a price movement down before the halving, but I would say it's likely after the halving. And I'm going to go through the chart in a minute. I know a lot of the OGs out there, they're going to know what I'm going to say anyway, but I'm going to reiterate for all the new people. But anyway, according to this analyst, Bitcoin is pretty unlikely to revisit $50,000 It hasn't dipped below 50,000 since late February, and it appears unlikely to return to, according to Dylan Leclerc. I've never heard of Dylan Leclerc, but I'm sure he works for a big company. The frequency of Bitcoin reaching higher support price levels, as well as the lack of immediate froth in the derivatives markets, suggests that its price is unlikely to retrace down to 50,000 anytime soon, according to a crypto analyst. So he is a senior analyst at UTXO. He explained that if Bitcoin rises back into $70,000 to $75,000 range, it will put significant pressure on short positions. It absolutely will. Now, at this moment in time, we're at 72,000. We're halfway between his targets. And like I said, a lot of you last week, when we were at 65,000, 66,000, I said a lot of you will be looking at my $74,000 target and saying that it's utter nonsense. Bitcoin can shift. It can move. It can go up as fast as it can come down. And we've seen it drop from 71, was it 70? We went from 71 to 68 in a day, didn't we? Something like that. So there was it can move very quickly. So to go from 70 to 72 to 74 can happen today. It can happen tomorrow. It can move very quickly. That's why sometimes when we're going down and down and down, and I'm saying, listen, 74 is the next target, a lot of people watching are saying, you know, we're going to go to 52,000, we're going to go to 48,000. But we don't go down forever. We're in a bull market. We're 2 weeks away from the halving. That's the point that you need to remember. Genesis has finished selling its $2.1 billion of Bitcoin. It now needs to buy $2.1 billion of Bitcoin. So what do you think is going to happen to the price this week? Wouldn't surprise me if we're at 74,000 at 6 p.m. tonight, the way things are. Then we could quite happily retrace, I get that, but those are the targets we need to get to. We need to break 74,000. That was the resistance level in the last spike that we had. So if Bitcoin price rises to 70,000, which it has done, 174 million will be liquidated according to CoinGlass data. We've seen all of those liquidated. Likewise, a similar percentage change of 7.5%, but in a downward movement occurred on the 15th when 525 million of liquidations. Now, we would live in a better place if leverage didn't exist. But leverage does move the price an awful lot. And you get short squeezes, you get the longs being liquidated. Good morning, Tariq. Welcome to the stream. He explained if we go to 50,000, which is a 27% decrease from where it is now, it's not. I think it's a lot more now. I think we're at 30% maybe, 30% where we would be. That would trigger a substantial liquidation of long positions. He doesn't foresee it considering the recent price. So he's not expecting the price to go below 50,000. But does he give us a price target of where we could go to? He backed up his claims by citing the recent action by global asset manager BlackRock, which updated its Bitcoin exchange traded fund prospectus on April the 5th, adding 5 more Wall Street firms: ABN AMRO, Citadel, Citigroup, UBS, and of course the one which we moaned about last week, which is Goldman Sachs. We've got Goldman Sachs telling us that their clients don't want Bitcoin. And then we have another department in Goldman Sachs telling us that their phones never stop ringing and they can't help the people and they don't know what to do. So what do you think is going to happen with Goldman Sachs? Do you think they're going to offer a product that they're going to make a load of money on? Or do you think they're going to listen to this woman who says that it's got no use case? I think they're going to start offering Bitcoin. What that's going to do to the price, who knows? Maybe $100 million a week, $150 million a week of extra buy pressure. Who knows? So people expect the price to go up. This is interesting. So Bitcoin price has risen 658%. Okay, if historical chart patterns were to repeat, Bitcoin's price would reach 434,000 per coin by the 2028 halving if it performs similar to the current cycle. Now, I don't know what price we're going to go to. I just know that we are going to go a lot higher than where we are right now. Excuse me. I am just trying to stay lubricated with my cracking headache. Okay, let's move on to the charts. Have a quick look at the Bitcoin chart, and then we're going to fly on because we are 20 minutes deep. So the first thing we need to update on this chart is the bull market support band, which the top of was $53,000 last week. This has now moved up to 54,800, roughly. 54.8 is now the bull market support band. We've moved above this level over here, which is where there was potential for us to come down to. So we've now moved up. And this is going to move up substantially over the next probably 2 or 3 weeks. So where are we going to go then with Bitcoin? Well, let's go back up here and have a look at the chop. We peaked out at 73.8. My target is here, which is about 74.1. That's my way from getting back to this level. Now, at this level, Brogan has a price target of $94,000 for Bitcoin for the halving, which is 12 days away. That's what he thinks we could go to. That would be a 30% move up from where we are now. Now, to put that into context, a 30% move down from where we are now takes us to the $50,000 the other gentleman was just talking about. So we're in this period of time where we've got 11 days left to the halving, and we are likely to pump. Now, the question always is, where are we going to go to? Well, I'm not making any predictions until we break 74,000. But if we did, what could very well happen is we move up here, we get to the halving, which is on Saturday, then we could have a correction. Now, given that we might end up bouncing and breaking and having a second level, we could come to 90, 80, 90,000. We could retrace and then use the same $74,000 as support and then move up later in the year. But I think we could have, if we have it's hard to predict. I think we're going to move up into the 80s, 84,000. If we do, we could have a small post-halving correction. And this is the thing that I was trying to say to people. And I've said this before about Gareth Salloway and other people like that. Okay. I'm waiting for a correction. I'm waiting for the correction. I am waiting for the correction. I'm still waiting for that correction. Oh, this is the correction, but I'm not going to buy in because it hasn't come down to where I think it's going to come down to. Oh, there's another correction I haven't bought. And then suddenly, this price they're waiting for to buy this correction, we go to 84,000 and we come back down to say 70,000. And guess what? All of these opportunities that people have had, all of these opportunities to buy those Bitcoin, guess what? The price never came back to them again. We possibly are never going to see a $40,000 Bitcoin ever again. So when you listen to people like Gareth Salloway and other people that tell you we're going to have this correction to 40,000, 37,000, we're going to go to 30,000, guess what? You've missed out because you didn't buy at all these prices they were telling you to wait at. And then suddenly, Bitcoin's got away from you so much that you're panicking, you don't know what to do. What you should be doing is what everybody would tell you to do, and that is you should be dollar cost averaging. So you buy here, you buy here, you buy here, you buy here, you buy all the way along every week, every 2 weeks, whatever your budget is, you buy at that point. And then guess what? Miraculously, we're at $72,000. But guess what? Your average price of Bitcoin is $50,000 or $52,000. So even though you might have bought here, you also bought there, and you also bought there, and you also bought there. Well, that gives you an average price of $69,000, for example. So don't listen to these people telling you, wait for the dip, wait for the dip. If we were looking at a meme coin and that meme coin has gone up dramatically, I will tell you to wait for the dip. But when we're talking about Bitcoin, which is a $1.5, $1.6 billion asset, these so-called social media influencers, these calls, key opinion leaders, or whatever they call themselves these days, they're just wrecking you by telling you to wait for the dip. But guess what? If they're right and there is a black swan and we come all the way down here, guess what you should do? You should buy the dip. And then as it starts to go up, your dollar cost average price goes all the way along that line. And if you've got $100 to spend on Bitcoin, you invest $15 a week or $20 a week, and you will catch all of this chop, all of these dips. You'll catch them because they last a day or two. So don't listen to people. Gareth Soloway was shorting Bitcoin at $49,000. He was shorting Bitcoin at $52,000. You can go as far back as you want. And I'm not picking on Gareth Soloway. I'm just using him as an example because he's the first one I can think of. But they're the people that are costing you. That's why you need to do your own research. And dollar cost averaging is one thing you need to research and understand. Because not only do you dollar cost average in, you dollar cost average out. So in a scenario, I do that every single stream. Okay. I'm going to give you a hypothetical question, or it's not a hypothetical question, scenario. Right, so we can't go that far. We are in 2025, and Bitcoin is doing this, and we are at $140,000 for Bitcoin, but it's the end of 2025, which traditionally is the end of the bull run. The end of the bull run is about 18 months after the halving. So we're starting to do this. What should you do? Well, first of all, you don't sell everything there. You don't sell everything there. You don't sell everything there. You dollar cost average out. So if you know, and it looks like we are going to go to 150,000, which is here. What happened in the last bull run? Everybody was expecting 100,000 and we got to 69 and dropped. So this is what I'm saying. So what you do, if you think we're going to go to 150,000, you start to dollar cost average out every week. You sell whatever it is amount you want to sell. I'm not giving financial advice, but you sell 10%. So if you have $100,000, you sell $10,000 every week. And in theory, over about 3 months, you will have taken most of your profits out. Then, if the price does this, and you're left with 20% of your bag, you've got 80% of the all-time high sold. That is an easier way than trying to time the market, because nobody out there that you watch is going to be right. Nobody. And the one person that is right is going to live off that reputation for the next 4 years, because any fool can predict the all-time high price. You ask 1,000 people to give you a price for the all-time high, and one of them is going to be right by law of luck and averages. And then that person becomes the God's given Warren Buffett title 2025 of crypto analysts. And then people follow him for, guess what, another 3 or 4 years. Then he makes a second prediction in 2028 and he's wrong. But does he care? No. And all the people that followed him because he was right the first time based on sheer luck, they're going to follow him and go, but you were right last time. Yeah, well, you need to do your own research. So you do your own research. I'm giving you patterns that happen. I'm not telling you when to sell. I'm saying you need to do your own research and have a plan to get out. And that plan should be to dollar cost average out the same way you should be dollar cost averaging in, taking profits along the way. Holding to the end, thinking it's going to go higher and higher and higher, will mean that you hold your bags for another 4 years. So just be careful. And like I say, everything I say is my opinion. You might want to sell at $100,000. You're perfectly entitled to do that. It's your money. But don't let somebody tell you to do that. If you want to do it, you do it. And as far as the answer to the previous article goes, do I think we're going to see $50,000? not unless there's a black swan. I think if there is a black swan, we will come back to $54,000, which is the bull market support band, and that's where we will hold the line. Now off the table, I think 54 is our absolute bottom. I don't see, and then there's bound to be people watching that disagree with me, I don't see us breaking below the bull market support band 10. However, let's say this eclipse happens and everyone else predicts there's a portal to some demonic dimension opens up in the CERN Hadron Collider and come out and start eating computers and stuff like that, then fine, yes, we'll go to 50,000. It's not going to happen. You need to look in the mirror and tell yourself to not be scared by clickbait. I think we're back. Are we? Hello, hello, hello. Now, I'm not one to tempt fate, ladies and gentlemen, but I just started talking about portals opening up in CERN, and all of a sudden my PC decides to absolutely crash. Now, I don't think that's a coincidence, so I'm not going to mention it ever again. That was freaky. Okay, I think we're back. I'm just going to wait and see if the stream is working. There we go. Okay, so I think we're back now. It could very well just be this article, so we'll go through it very quickly. Solana is a cryptocurrency, we know about that. It broke $200, it came back down. We don't need to talk about this. The Sol ETH chart is huge resistance. Resistance is resistance supply. If this supply line is absorbed, then there is a prospect of Sol doubling in value versus ETH. I'm going to explain why this is probably going to happen anyway. This isn't the first time Brandt has criticised Ethereum, underscoring ongoing debates within the sphere about its position and potential. He tweeted, "I get tired of saying it, but ETH is a junk coin despite mindless devotion of Etheridiots. As a store of value, it is junk. A BTC pretender. Nobody says that Ethereum is a store of value. I certainly don't call it a store of value." Despite his criticisms, Brandt indicated his willingness to take advantage of ETH's market fluctuations. Solana is a highly efficient protocol that hasn't nearly hit its scaling ceiling. This particular issue doesn't hit the transaction processing part of the protocol and isn't an issue of failed transactions. I'm just making sure everything's still working. Right, we're just going to get onto the chart. I think this article has got some bad scripting on the page. I think it's causing issues. So I'm going to move off to TradingView and then tell you what I think when this decides to work. Now, hopefully, that will resolve the issue. So basically, the premise that Ethereum is junk is one that I disagree with. I think Ethereum has been chosen by the institutions. If you look at very recently, BlackRock's launched the real world asset token. It's launched on Ethereum. If you look at what countries and certain large organizations are looking to build their platforms on, it is Ethereum. It's not Solana. Chainlink, which is going to help integrate everything together, is of course, an oracle, it's agnostic. So Ethereum has been chosen as the institution level blockchain. And I said a few days ago, Solana is the retail level blockchain because Solana is cool, it's got really nice UIs, it's got a nice NFT marketplace, DeFi, and it's cheap. Ethereum isn't cheap, but by not being cheap, it also allows it to have value within the chain. So nobody should listen to people who say that Ethereum is junk, the same way that you shouldn't listen to people that say Cardano or XRP is junk, for that matter. They're not junk. You might not like them, that's fine, but they're not junk. Ethereum certainly isn't. The layer 2s that are built on top of Ethereum, you'll hear people say, if Ethereum worked properly, you wouldn't need Matic, you wouldn't need Optimism, you wouldn't need Arbitrum. That again is a mute argument. There is a trilemma: decentralization, speed, and security. Decentralization, and this isn't a 40-year-old problem. Decentralization, having a network that crosses multiple countries, speed, how fast the transactions can be put through, and security, how secure is it? Look at Bitcoin and Ethereum in the same light. Bitcoin and Ethereum are both massively decentralized and massively secure. They are not fast, and they never will be. I don't think we're going to solve this problem in the near future. Polygon solves all the problems about speed, it solves problems about liquidity, it joins everything together. Ethereum has a symbiotic relationship with Polygon. That will never go anywhere. Ethereum cannot really catch up. We've heard all of these talks about sharding and the way that they're going to do the transactions. At some point in the future, Polygon could become part of Ethereum, but it will always be a different layer that sits on top of Ethereum. So don't listen to people that call out Ethereum. It has its faults, and even I said on the platform a couple of months ago, there's something wrong with Ethereum, but I can't put my finger on it. There is. But there's things wrong with everything. You name a chain and I'll tell you a problem with it. Most of those problems will be to do with adoption. Some of them will be, like for Solana, for example. Solana's got massive teething problems. It's a victim of its own success, Solana. Ethereum has its problems in terms of speed. Bitcoin has its own problems. Everything has a problem. We are still early. You should accept these problems because they're not going to go anywhere. 5 or 6 years' time, most of these problems will be ironed out. But at the minute, we are live beta testing blockchains in a real-time environment with millions of transactions a day. It's not easy. So anyway, what do I think then of Solana? Well, as you know, we don't redraw these charts, and I haven't looked at this since the last time we did it. And I think, suffice to say, our chart pretty much held up. And that is, the bottom here is 174, the top here is 200. We came down, we did wick to 168, but we pretty much, if we zoom in, I think that chart holds pretty well, considering we probably did this a week or so ago. Now, maybe we need to do that and adjust it to $201. But apart from that, I think that's done mighty fine. So what do I think then for Solana? In the short term, I think we are closing up towards the halving, so I expect this kind of action. I expect us to get back towards $200 by, look at that, yeah, pretty much by there. So I think this is what's going to happen. There's the halving. I think we're going to be somewhere around $200 by the halving. Now, I said I didn't want to see a $200 Solana before the halving because it's too high and it's too far. It's too high, it's too far. So $200 at the halving for me is perfect. Why? Because there are people saying that we're going to hit $1,000 this year. I disagree with them. I think we're going to get towards $400 or $500 by the end of the year, and I think we'll hit $1,000 by the end of the bull run. That is, I don't know whether If Ethereum gets the ETF, I can't see Solana outperforming it. So going back to this thing, Solana or Ethereum, if Ethereum gets the ETF, by the end of the bull run, Ethereum will have probably outperformed or matched Solana. Because I think with the ETF, we could see a $15,000 to $20,000 Ethereum. Without it, we could see a $10,000 to $12,000 Ethereum. Well, that's a 4x, roughly from where we are. Maybe call it a 3.5x from where we are. To get Solana to $1,000 from here is about a 6x. So you work that out. If we're a 3.5x for Ethereum, we're a 6x for Solana. That's almost double the market cap. So I kind of agree. But if we get that ETF, all bets are off. All bets are off. But what I would say is once that Ethereum ETF is approved, guess what's next? There's either going to be Litecoin, which is why it's pumping. Litecoin will get its own ETF, or we will see a Solana ETF. Now, you need to give me 1 second. I need to go and get some more coffee because my voice is going. So give me 30 seconds. Okay, I am back with more coffee. I am desperately trying to get through everything. I should probably have taken some headache tablets, but there we go. Right, okay. So for me, without the ETF, Solana will probably double in market cap compared to Ethereum. However, we all know Ethereum's going to get the ETF. We all know it's going to happen, so it's a mute conversation. I think we could see a $20,000 max Ethereum. We could see $1,000, $1,200 Solana, potentially. That's where I think we are. And it's, I mean, again, we don't have a crystal ball. We don't know what's going to happen. There's going to be an election in the next, in November. So that's going to have a massive effect. Trump looks like he's going to win. So let's see. Let's take it from there. Now, let's move on then very quickly. My stream seems to have frozen. Let's get this up now. Ever since I mentioned that demonic portal, this stream has gone wrong. That will be the last time I ever mention a demonic portal on this stream. So, breakout of the year. Crypto analyst predicts where NEAR is headed next. The price of NEAR Protocol's native token NEAR has been on an upward momentum recently, with a crypto analyst predicting further price increases and suggesting that the coin could see a surge to more than $10 soon. That is some price prediction. Popular trader and analyst identified as Blunts has unveiled a major price prediction for NEAR. NEAR Turbo sends here IMO, in my opinion. Blunts is a pseudonymous analyst known for his eerily accurate prediction of Bitcoin. Here we go again. Forecast that the price of Bitcoin would hit a bottom at $3,200 after reaching an all-time high of $20,000. True to his foresight, Bitcoin dropped. Now, using his technical analysis based on the Elliott wave principle, Blunt has shared a price chart displaying NEAR Protocol's potential rally to over $10. The Elliott wave theory, developed by Ralph Nelson Elliott, is a technical methodology that analyzes recurrent and long-term price patterns. We don't need to talk too much about that. Over the past month, the price of NEAR protocol has been on a steady upward trend, boasting an impressive 26% increase. Moreover, the asset's total market cap has risen 6%, accompanied by a 25% increase in its volume. So let's go and have a quick look at the price action. What time are we? 11:45. I think we're on time, I believe. Now, I don't think we've looked at the NEAR price recently. Or maybe we have, because there is a chart on here. So, again, with a lot of these coins, what you have to kind of do is zoom out and see where we are. Now, NEAR hit $20 in the previous bull run. Let's make this a bit narrower. Let's drag that down a bit. There we go. Okay, so we hit $20. We came down. Now, these fib levels have held pretty well. Obviously, that was the top. But then we bounced off here. We came down. We bounced. We came under here. So it's followed it fairly significantly. Now, what does the fib tell us here? We have come back up to this fib level here, which is $8.10. And what we did, as with a lot of these coins, we broke above the bull market support band. We bounced. It rocketed us up to this fib level. We've come back down. Now, what's likely to happen is one or two things. We're going to do this, bounce off it again, come down, and then break, or it's going to forget all of that because Bitcoin's about to rally and it's going to smash through. And where is the target for me? Pretty much the same as what the previous gentleman was talking about. That level there is $10.30. So $10.30. I can't. Right, never mind. You know what I mean. So $10.30 for me is probably where we could go for NEAR protocol. Certainly in the next couple of weeks, and that would be a fairly healthy 33%, 35% return. Again, everything depends on Bitcoin, but if Bitcoin keeps this momentum up, then that's where we're going to go, in my opinion. And I think $10.20 is a reasonable target. A reasonable target. Now, I don't hold any NEAR. I don't have any ulterior motive to telling you about this, but I do think, based on what we've done, which is this kind of action, I do think we're going to do that. So yeah, $10.25. Above there, you can look at $12.55. If we go back to previous price action, there is a level there which is $11.80. That's a possibility. Again, we don't need to redraw this, but the fib level has had lots of price action near it over there. So again, $10.20, then about $11.80, and then you're talking about moving all the way up $13.30, and then you're all the way up back up to $20. So yeah, I think it could follow that price action. Absolutely, I don't see why not. But again, as we say on the stream, you want to be buying NEAR in that block there. And that block there, I mean, you could have picked it up at $1.20. Even October 23, so 6 months ago, you could have got it what looks like $1.20. That's when you want to be buying these tokens, not as they start to rip up. Because you are going to make a 5x on this, maybe a 4 or 5x on this. But if you'd bought it at $1 and $2 and it goes to $20, you've done a 20x. So just bear that in mind. You don't have to buy every coin that's going to go up in value, because the majority, not all, the majority of coins are going to gain over the next 18 months. Now then, let's move on. We've got 10 minutes to go. Let's see where we are. So Pantera Capital's crypto fund surges 66% amid market optimism. So Pantera Capital's liquid token fund reduced exposure to Bitcoin and ETH in the first quarter of 2024 while increasing allocations to DeFi tokens. It's always good to look at these. We looked at the Grayscale one. I think it was it Saturday or Friday? We looked at the Grayscale one. Why is that important? Because it kind of tells you what the big boys are doing. What are the big funds, the big traditional TradFi companies? What are they buying and what are they selling? And we saw that they had removed Cardano from one of their funds, and I think was it AVAX was removed as well, something like that. So it's good to see what these guys are doing. So according to a shareholder letter reviewed by Bloomberg, the fund's strong performance from January to March was also propelled by assets such as Ribbon Finance, I've never heard of it, Stacks, yes, while exposure to tokens tied to Bitcoin and Ether decreased during the period. Portfolio manager Cosmo Jiang told Bloomberg the fund has reduced its Bitcoin holdings by more than half since the beginning of 2024. We've been pretty heavy in Bitcoin until the start of the year, and I really like each month we've decreased the position meaningfully. Data from TradingView shows that the RBN tokens rose 400% this year, while gains for Sol were at 70%, outperforming Bitcoin's 62%. Let's have a look. Does it mention the actual assets? I'm sure it does. So it's a $5.2 billion asset manager. It's recently raised $250 million to buy Sol tokens from former crypto exchange FTX. Now, this was the steal of the century. They bought the FTX tokens for $64. So they have turned, on that one trade, they have turned their $250 million into $750 million. Immediately. They've made $500 million on one trade. Good morning, Fran. Welcome to the stream. Sol's price performance has been attributed to a rise in its blockchain market dominance and meme coins frenzy. Yes, we know about that. So Bonk, Dog with Hat, Cat in the Dog's World, and Book of Meme, according to a CoinShares report, institutional investors poured $25 million into Sol-based investment funds in March. Now, again, we've talked about this before. If you look at, what was it called? Oh, the Grayscale Solana Trust, I think it's called. That's trading at about $500, $450, $500, something like that. Now, that is held one-for-one with Solana. So institutional investors think that the current value of Solana is, obviously that's a bit of a premium, but they think it's $400 to $500. We're currently trading at $185. So it's 1.5 times the value on top again, which is pretty impressive. So overall, I'm a big fan of these funds coming into the market and gaining or giving exposure to more people, because that's what we need. We need exposure, we need liquidity, we need people to come piling into Bitcoin, to crypto in general, and that just means that we can see more gains on our bags, but it gets us more exposure, and more exposure is what we want. We want adoption and we want regulation. Two things we need. Now, finally, this is a fairly lengthy article, so we are not going to spend too long reading every single sentence out, but I just wanted to give you a heads up on Pendle. So Pendle has been around for a while, but many people don't know what it does, and I think it's quite a cool coin. It's quite a cool way of exposing yourself to crypto, if you like. So I'm going to go through the article and try and pick out the salient bits and then tell you why I think it's a good thing. Remember, if you are watching and I haven't done this all stream, don't forget to give us a follow, subscribe, hit the like button, do all of those things. We stream every day at 11 a.m. Sometimes we stream on a Monday and a Wednesday night at 9 p.m. or 8 p.m. So make sure to give us a follow. We are trying to get to 200,000 people by the end of the year. We're at 117,000. So we've got 83,000 people to get in 8 months. So I don't know whether it's possible, but if you don't set a target, then what's the point? So then, let me make this a little bit bigger so you can see it. Right, let me just not talk about this. Here we go. So Pendle's ecosystem and use cases. To fully appreciate Pendle's surge, it's crucial to understand the ecosystem and use case that underpins it. Pendle is a decentralized finance protocol built on the Ethereum blockchain, offers users the ability to tokenize and trade future yield from DeFi assets. So this innovative approach enables users to unlock liquidity from their future yield streams, providing them with greater flexibility and efficiency in managing their DeFi protocols. What does this sound like? This sounds like traditional miners. Gold miners and diamond miners, they sell their future yields to generate revenue. Think of it, it's like chicken and egg. They can't dig the gold out of the ground until they have the money to dig the gold out of the ground. Where do they get the money from to do that? They get that from selling the gold they haven't dug out of the ground yet. This is the same thing. You have Ethereum. If you have $100,000 worth of Ethereum right now, you know you're going to make $4,000 over the next year in yield. That $4,000 can be unlocked via Pendle. That's how this works. One of the key features of the Pendle protocol is the ability to create yield tokens which represent future yield streams from specific DeFi assets. These tokens can be traded on secondary markets, allowing users to monetize the future yields instantly. Additionally, Pendle's platform offers various liquidity pools where users can stake their YT tokens and earn additional rewards. So it's a clever mechanism for simplifying a complex financial tool and product. That's the way to look at it. So they've dumbed it down and made it easier for traditional people, retail, to have access to tools that only sophisticated investors and TradFi platforms would they be able to use. Pendle continues to gain momentum, attract attention from investors and industry insiders alike. The currency's future trajectory remains a subject of speculation. We've got short-term volatility everywhere. Its TVL continues to surge, and prominent figures endorsing its potential. Pendle appears poised for further growth. Now, you've got to be very careful when you read these articles that it's not a sponsored article by this website. So you have to be careful especially when you read about tokens that you've never heard of before. So, when you see an article that says Argon Finance is going to 1000x this month, you pretty much know that article has been paid for. So you have to be careful when you read these things, and you need to go and do your own research. Is this the one? Yeah, okay. So this is Pendle, and again, like I said about do your own research, it's already got a $1.5 billion market cap. So it's not one of these tokens that just, has a $10 million market cap and it's being pumped because the people behind it are paying for adverts. This is a genuine project. So I think it's worthwhile people spending 10 minutes going to look at Pendle and seeing if you understand it, see if you like it. Expose yourself to another product in crypto. You trade in your products, you buy your Litecoin, your Bitcoin, your Ethereum, you buy these products. It's never a bad thing to educate yourself in other products. And Pendle is, let's wait for all of this to load. I think I'll rename this stream the CERN Hydrogen Hydro Collider stream after what happened. So, fixed yield, control your yield. It's got two different options. Total value locked, total trading volume. It's got the different chains here, Ethereum, Arbitrum, BNB, and Optimism. Yield tokenization, I've looked at that. It's used by lots of different companies. It's audited to the hilt. It's not a fly-by-night project, and I think just go and look at it. I am not, by the way, this is not sponsored. I'm not telling you to look at this because I'm being paid. I'm telling you to look at it because I think it's quite a cool product. I think it's quite a nice thing. It's also, it's not a small market cap. 1.5 billion, it's not a small market cap. I don't know what the volume has been, but it looks like it's been fairly impressive. It's gone from 60 cents to $6.50 in what period of time? September, October. So very similar to NEAR in terms of its rise. So go and check it out. Again, I'm not here to tell you to buy it. I'm here to tell you to go and look at it. If I find something cool that I think you'd benefit from an education point of view from looking at, then it would be Pendle. Now then, so final thought of the day then, because it is now 12:01 and we know we don't want to keep you guys here for the rest of the day. So we're going to very quickly go through my thoughts of the day. First of all, Bitcoin is at 72,200. We are, according to here, 11 days from the halving. We're going to get, it's a little bit like, you know, when you get on one of those horses in pubs and you hold on and it's trying to kick you off. Buckaroo, I don't know what it's called. Imagine that BlackRock is that bull and all the ETFs are trying to shake you off and they're trying to get you to sell your Bitcoin, and they're doing it because they want a $70,000, $72,000 Bitcoin. Why do they want it? Because they know that it's going to go a lot higher. Unless you need to sell your Bitcoin, now is not the best time to sell it. There could very well be a post-halving dip. So come April the 22nd or 23rd, there could be a dip. Or it could absolutely rip, because we go from 900 Bitcoin a block. Sorry, we go from 900 Bitcoin a day to 450 Bitcoin a day. And that supply shock takes a good amount of time, 6 months, for it to actually hit the markets. So don't expect us to get to April the 21st and for us to be at $250,000. That's not going to happen. We might see a sell-off. But again, you're not day traders and you shouldn't be day trading. If you've got your Bitcoin, if you hold 0.1 Bitcoin right now, you should have 0.1 Bitcoin and maybe a little bit more by the end of the year. Then you should have 0.1 Bitcoin and a little bit more by the middle of next year. And then the middle of next year, that's when you should be deciding if the price of Bitcoin is where you want it to be for you to sell. Not for me, not for Gareth Soloway or Ben Cowan or anyone else to tell you to sell. It's when you want to sell. So what's the price going to be in your head? Now, my opinion, my personal opinion, not financial advice, is I don't know where the price of Bitcoin is going to end up. November next year, we could be at $100, $200, $400,000. So I am going to assess what I'm going to do with Bitcoin in the summer of next year. I'm going to assess where the market is. Now, we don't know where that's going to be. The Ethereum ETF, when that comes on board, that's going to pump the market. That's going to be next year. That's why I want it to be next year as well, because it will add more fuel to the fire. So my final thought is, if you're thinking about selling Bitcoin to buy a meme coin or to buy Pendle or Near or a coin that's just been launched, think twice before you sell it. You're perfectly entitled to do so. Maybe you bought it at $15,000. Maybe you've 5x your money. Maybe you want to take some profits. That's fine. But don't do it because somebody on the internet tells you we're going to $30,000 or we're going to $700,000. So you need to buy all of it today, because we don't know what the future holds for it. But now, in my opinion, I am not selling Bitcoin until next summer. And then I'm going to decide what to do. And you should be in the same situation as me. Your bags should be packed. You've had a year now to get ready for this. If you still need to buy crypto, start to dollar cost average in. Buy every week, every Friday, buy whatever percentage of crypto you can afford. Don't sell anything just yet that's a major top 10 coin. If, in my opinion, you should be holding them. If you've got a meme coin that's made you 100% profit, 500% profit, by all means, sell it. But when we're getting to the serious coins, which is the ones on the screen now, those are the ones that you should be holding. Solana, XRP, BNB, Ethereum, Bitcoin, Cardano, even Toncoin, which I cannot stand the project, Avalanche. All of these coins are serious projects that you should be holding on to until the end of the bull run. That's my personal opinion, not financial advice. And that is the end of the stream. So if you have liked what you've seen, or heard, should I say, smash the like button, give us a follow, and if we are being wiped out by the demons that come out of the collider during the solar eclipse, it's been nice knowing you all, but given that that's not going to happen, I'll see you all at 11 o'clock tomorrow morning with another stream. 9th of April is a big day, by the way. It is Brogan's birthday. Brogan the Oracle is it's his birthday tomorrow, so I'll be streaming in the morning and probably eating lots of food and drinking lots of kava tomorrow if my headache's gone. So I will be with you tomorrow, but Wednesday is looking a bit flaky right now. So take care, everyone. Thanks for watching. Thanks, everybody, for tuning in. Thanks for all the comments in chat. Fran, Gianni, Tariq, you know who you are. Thanks, everybody. Take care. See you in the morning.